Hi, good morning, everybody. Welcome to the second part of our four-part series where we go over the form CT-PET and the CT-1065 CT-1120SI. My name is Crystal Hale. I am the Tax Unit Manager with the Department of Revenue Services Pass-Through Entity Audit Unit. And I will be your host today and going over this second webinar. So today we're going to do a recap of webinar 1, so no worries if this is the first webinar you are attending. We also received some questions, and one of them was, why would I want to make the pass-through entity tax election? So we will go over that as well. We will go over a return example, starting with the election, where we'll complete the form CT-PET. Next, we'll complete the composite return, form CT-1065, CT-1120SI, and then we'll also complete the schedule CTK1s for a couple of the members. Next, we'll go over where the credits get reported on the individual income tax returns. We'll go through a summary, and at the end, Kelly McLaughlin will join in and show us where some of the resources are available, and we also will have a Q&A if time permits. So what did you miss with the first webinar? So beginning in 2024, there are now two pass-through entity tax returns. We have the pass-through entity tax return form CT-PET and the CT-1065 CT-1120SI Connecticut Composite Income Tax Return. The form CT-1065 CT-1120SI is a mandatory composite return, which is similar to the 2017 Connecticut Composite Income Tax Return. Form CT-PET is now an elective PE tax. To make the election, the taxpayer would need to check the PE tax box on the front of the composite return, on a timely filed composite return as well. The due date has not changed. It is March 15th for calendar year filers, or on extension, September 15th for calendar filers. Lastly, estimated payments are required for the pass-through entity tax, but not the composite tax. We do have some upcoming webinars. So today I told you we're going to go over some very basic examples, starting with the PET election to the composite return to the CTK1. Part 3, we do plan on going over more complex topics, such as unsourced income, including pass-through entity tax credits from subsidiary entities, and Connecticut source income from subsidiary PEs as well. Please, there will be a survey at the end of this that you will receive in an email. If there are any additional items you would like included, please put those in the survey so we can incorporate that for either webinar 3 or webinar 4, which will just be frequently asked questions, an overview of any questions you might have. So the question of the day was, why do I want to make this pass-through entity tax election? So the Federal Tax Cuts and Jobs Act of 2017 limited itemized deductions for individuals for state and local government income and property taxes. So the limit was only $10,000. So an entity level tax was created, and that is not subject to that limitation. What it is for all of that pass-through entity tax that has been paid, it is deductible as an expense within ordinary income. This would be reported on the Form 1065 or 1120S. So in essence, it wouldn't be an income tax, it's actually an entity level tax. All right, so I think what all of you are here for today is to go over an example. I'll go through each part of the forms for all of the returns that we're going to go over. Here's the example that we're going to use throughout. We have 3 members. We have one non-resident individual with a 30% membership percentage, a resident individual with 50% interest, and a C corporation with a 20% interest. The fact pattern is that they operate wholly in Connecticut. They earned ordinary business income of $280,000, interest income of $20,000, and also a modification for the 168K bonus depreciation of $70,000. So in this case, we're making the PET election. So first we'll complete the form CT-PET in the order in which to complete the returns. This includes completing the pass-through entity tax information. In this example, we will skip this because that can vary based off of the type of taxpayer. So please make sure to complete that first, though, when completing the CT-PET. Next, we'll go over Part 2, Part 3, Schedule B and A, Part 4, and then we'll end with part 1 and kind of bounce around these schedules. So first we're going to complete part 2. In this case, since we operate wholly in Connecticut, our apportionment fraction is 1. But if the PE is carrying business on within and without Connecticut, these lines 1 through 6 would be completed to determine a total apportionment fraction for Connecticut source income. Next, we'll complete Part 3, Schedule B. These are the pass-through entities' Connecticut modifications. As you can see in column A, these are the total modifications that I have reported on my Schedule K integrated in those items. So we had a Section 168K federal bonus depreciation that we are adding back. So our total modifications for that is $70,000. In column B, it's blank because we have no subsidiary income in this example. So our net modifications is column A minus column B, leaving us with the $70,000. Once again, in this example, we are operating wholly in Connecticut. So column D is the $70,000 of an addition modification for this 168 bonus depreciation. Next, we'll complete Part 3, Schedule A. If you've completed a pass-through entity tax return in the past, this should look very similar to the old Part 1, Schedule B. Here is where we're going to determine the total Connecticut income. Column A are the amounts reported on Federal Schedule K. So lines 1 through 13 should be identical to what is reported on the entity's Federal Schedule K. Column B are the amounts from the subsidiaries which we would pull out in determining our income from our own activities. So in this example, we have no subsidiary income, so we are left with our ordinary business income of $280,000 and our interest income of $20,000. Since we are operating wholly in Connecticut, column D, which is our Connecticut source income from our own activities, is equal to our federal amounts. Now, as we get lower in the line items, we also have incorporating our subtraction modifications from Part 3, Schedule B, and our addition modifications from Part 3, Schedule B. So from that part that we had just completed, we did have that bonus depreciation modification of $70,000, which would be noted on line 17B of Part 3, Schedule A that we're looking at right here. In addition, if we did deduct any Connecticut PE tax payments in determining our ordinary business income, this would be added back on line 17A. So our total amount here for our income from our own activities is $370,000, as you can see on line 18, column D. So next we're going to complete Part 4. This is our member information. And just using the facts that we have at hand, member number 1 is a non-resident individual with 30% distributive share. Member number 2 is a resident individual with 50%. And lastly, we have our C corporation with a 20% distributive share. All right, now we're going to compile all of this information to determine what our Connecticut source income is subject to tax, what is our tax, and what is the PE credit that we're going to allocate to our members. So first we're going to complete Part 1, Schedule B. And as you see, I kind of mentioned other parts. So you may want to kind of look through and start one part, maybe move back to another part to make sure that you're completing it accurately. So starting with Part 1, Schedule B, this is our pass-through entity income. And if you were here for the first webinar, the pass-through entity income is taxed on our own operating income for all non-corporate members, along with our unsourced income for our residents. So line 1 is our total Connecticut source income from that prior part we just completed, Part 3, Schedule A, totaling $370,000. Our distributive share is for all of our non-corporate members. So our fact pattern, we had a C corporation with a 20% member percentage or distributive share. That's excluded from line 2. So we are only taxing our non-corporate members. So our total modified Connecticut source income is $296,000. We do not have any unsourced income in this example because, as you saw, all of our income was from Connecticut sources, there was nothing left over that would potentially be unsourced. So at the end of the day, our PE income subject to tax is $296,000. Next is Part 1 Schedule C, where we had already determined that our unsourced income was 0. So in this case, our total PE income from Part 3 Schedule A, which would be everything, all of our federal items, was $370,000. Lines 2 through 4 is where we remove items that would already have been allocated. This includes our Connecticut source income that we're already taxing. This includes Connecticut source income from subsidiary pass-through entities, which in this case, we didn't have any subsidiary income. And lastly, we have other state sourced income. We will get into this issue or question further in webinar 3. So we ended up subtracting out everything because all of our federal income was Connecticut sourced. And then line 7 would just be the resident individual distributive share percentage, which will go further in on Part 1 Schedule D. But at the end of the day, we were left with no unsourced income. Next, we're going to complete Part 1 Schedule D. This is the allocation of PE tax credit to members. So as you see in column A, I only included my non-corporate members, member 1 and member 2, a non-resident individual and a resident individual. In column C, I've included their distributive share, which got us to that 80% that we did include on Part 1 Schedule B. We are going to prorate the Connecticut income using those distributive share percentages. So $111,000 was allocated to member number 1, and $185,000 was allocated to member number 2. Next, we're going to determine the unsourced income. We have a 50% resident member, but when we completed Part 1 Schedule C, we did not have any unsourced income. So that amount is actually 0 in column F for any of our residents. Column G, we will add both. So we're going to add our modified Connecticut source income along with our unsourced income to our residents to determine our total PE income subject to tax. The amount on line 7 of column G should tie to the amount that we reported on Part 1 Schedule B. We then determined the entity tax at 6.99% for these members. And lastly, the PE tax credit that would be allocated to each of these members at the 87.5%. So I want to stop here because I want to make sure that we have not talked about what information is being used to complete the Schedule CTK1. All information in completing the Schedule CTK1 will be used on the composite return, which we have not yet completed. So I want to make sure that we are using the column I amounts here actually transfer onto the composite return, which I'll show in our later example. And that is what we would use to complete the Schedule CTK1. So please don't use these PE credits because there's additional potential limitations or additional credits that we may have that we would include. So column I will transfer over onto the composite return. Lastly, we're going to complete Part 1 Schedule A. This is where we determine the computation of amount due. So the total PE income subject to tax from Part 1 Schedule B is reported here on line 1. The 6.99% once again should all tie to this Part 1 Schedule D as well. We have a liability of $20,690. So I want to get into and discuss the payments and also how we can apply overpayments on the pass-through entity tax return. So if you take a look at the sub number 5s here, we have 5A through 5D. You would include any 2024 estimated payments on line 5A, an extension payment on 5B, any overpayments from the prior year that you had carried forward to 2024. And for amended filers, you would include any additional amounts paid. But if you are an original filer, you would not complete this. So at the end of the day, I have $25,000 of an extension payment, which results in a refund of $4,310. We have multiple avenues to allocate this overpayment. So if you look down to lines 10 10A through 10C, we have different options. So on 10A, we can allocate it to our future year's estimated PE tax as a timely payment. 10B, we can actually apply any overpayment to the 2024 composite liability, which is what was chosen in this scenario. So what we should see is this $4,310 actually being reported as a payment on the composite return now. And lastly, it could be directly refunded to the taxpayer. Okay, we've completed our pass-through entity tax return. We've made our payment. Now let's complete the composite return, which is actually required even if you are electing the PET. The order in which to complete this return starts off with the pass-through entity tax information, which in this example we won't have because that will vary. We then go to Part 1 Schedule C, then Part 1 Schedule D, Parts 2 through 8 in that order, and then we end with Part 1 Schedule B and Part 1 Schedule A. So we start with Part 1 Schedule C, which is our federal Schedule K information. Column A, we would complete with the information that we have directly on our federal Schedule K from the 1065 or 1120S. So using this fact pattern, we have $280,000 of ordinary business income and interest income of $20,000. Here in column B, we would remove the amount from subsidiary PEs, and in this example, we don't have any. So all of our own operating income stays the same as the federal amounts. Next is Part 1 Schedule D. This is Connecticut source income from subsidiary PEs. And as I've said, we don't have any subsidiary information here, but this is where you would include it. You would input the name of the subsidiary PE, their federal ID number, any amount reported on the federal K1, so the total amount. If that subsidiary PE had filed a Connecticut return, you should have received a Schedule CTK1, where you would complete columns B, your amount from Connecticut sources, column C, any composite tax liability that was paid on your behalf, and column D, any PE tax credit that was paid for you through the subsidiary. Next is Part 2. This is identical to what you had just completed on the Form CTPET. And in this case, the entity is carrying business wholly in Connecticut, so our apportionment fraction is 1 or 100%. Next, if the entity is conducting business within and without Connecticut, they're required to complete Part 3, the place of business. You would include any places of business where you have a location or doing any type of business. In this case, since we are operating wholly in Connecticut, we don't have to complete this. Next is the Part 4 information. This is pretty similar to the Part 4 information on the Form CTPET. We will display out all of our members, their member type code, their federal ID number, social security number, and in this case, we have their profit, loss, and capital ownership percentages. So I have a non-resident member with our 30% profit sharing percentage, a resident individual with 50%, and our C corporation again with 20%. All right, the next parts we're going to get into are informational. This doesn't determine the Connecticut source income or taxability at the composite level. What this does, Part 5, 6, and 7, help in completing the Schedule CTK1s issued to the members. So this is a little different than the Form CTPET where we took all of the operating income and determined a tax off of that. Here we're allocating all of the modifications, Connecticut source income, and everything else we'll talk about to each member. So Part 5 is each member's total share of modifications. So in the example, we did have a bonus depreciation add back of $70,000. We are allocating that to our members based off of their percentage share. So member number 1 has a 30% percentage share, so his 30% of $70,000 is $21,000. Member number 2, as a resident, he has a 50% share, so half of the $70,000 is $35,000. And if you notice here, member number 3 is not included. because the modifications are not required for C corporations. Next is Part 6. This is where we determine the member's Connecticut source income as modified. If you see here, we've only completed it for member number 1. This part does not need to be completed for resident members or C corporations, as they are not included in the taxable income or what's determined for the composite return Connecticut source income and the liability that's determined at this level. So we've only completed this for member number 1. In determining and calculating his ordinary business income, it's noted below because we have to incorporate his Connecticut source modifications as well. So our ordinary business income federally is $280,000. Our Connecticut apportionment fraction is 100%. So the income from Connecticut sources stays at the $280,000. The non-resident has a 30% share, so he's receiving ordinary business income from Connecticut sources of $84,000. We have to modify that amount to include what we had in Part 5, which was the modification for bonus depreciation, Section 168K. The federal amount was $70,000, and as you noted in Part 5, his portion was $21,000, and since we are operating wholly in Connecticut, that would be included and added back in Connecticut source income. So line 1, ordinary business income, is the sum of both the federal ordinary business income and applicable Connecticut modifications. Line 5 is the $20,000 of federal interest income multiplied by his member percentage of $30,000. So when you add these two items together, we have $121,000 of Connecticut source income for member number 1. Next is Part 7. This is the Connecticut income tax credit summary. Please note that the current credits that we have available that would offset up to the composite liability but are not refundable include the Youth Development Organization Contribution Tax Credit, the ABLE Account Tax Credit, the Angel Investor Tax Credit, and the Accredited Theater Production Tax Credit. There's a lot of information available on our landing page for both the pass-through entity tax, the composite return, and actually I think it's just under the composite return landing page, and the individual income tax landing page too. That gives more information on these credits and whether or not you qualify for them or how to qualify for them. In this example, we do not have any of these income tax credits, so it is left blank. Next is Part 8. This is where we allocate the pass-through entity tax credit. The PE tax credit can come from 2 different places. So first, it would be if we filed and elected the CTPET and made any pass-through payments, which created a pass-through entity tax credit. So we did. And in this example, I have a screenshot of our completed Part 1 Schedule D from Form CTPET below. So as you see in column B of Part 8, we have transferred the amounts from column I of the PET return Part 1 Schedule D. So member number 1 has a pass-through entity tax credit of $6,789, and member number 2 has a pass-through entity tax credit of $11,315. If we did have subsidiary income, which had a pass-through entity tax credit that we would have received on a CTK1, we would complete column C and allocate it to our members. In this case, we didn't have any, so column D just ends up being all of the amount from our CTPET that we filed. Now please note column E is the amount that would be applied to the composite liability on this return. This should only include non-resident individuals, non-resident trusts, non-resident estates, and other entities that are pass-through entities. So in this example, column E is only filled out for member number 1 because he's a non-resident. So what this is going to do is offset the composite liability for that amount, meaning the composite tax due would not be the full liability because it would be offset by this. We are not going to transfer over the amount of $11,315 from our resident individual because the composite return is not paying any composite liability for that member. So as you can see, when we complete the schedule CTK1s, how that 11,315 will transfer over onto that resident individual's CTK1. So now let's put it all together. Part 1 Schedule B is our pass-through entity members' composite return, where we report all of the non-resident or taxable members' Connecticut source income, Connecticut income tax liability, and offset it with any credits. So in this example, member number 1 is our only non-resident. As we showed in Part 6, the total Connecticut source income for this member was $111,000, which results in a liability of $7,759 at our 6.99% tax rate. We may offset that with a member's income tax credits, only up to the liability. Those income tax credits that I'd mentioned before that were on Part 7 included the angel investor, able credit, and those items. This is not where you would put the pass-through entity tax credit. In this example, we didn't have any income tax credits, so that line is 0 or left blank. So overall, our Connecticut income tax liability is $7,759. Our PE tax credit transferred over from Part 8, Column D. In this case, it was not greater than our Connecticut income tax liability, so it would not be limited on what we report to the member on their Schedule CTK1. And that's why it's limited here, because any additional, if the PE tax credit was overpaid, the excess would actually be refunded to the pass-through entity on the front page of their return. So the member, the non-resident individual or pass-through entity that they're paying the composite tax on, would only get the PE credit up to the composite liability. And lastly, we'll complete Part 1 Schedule A. So we take the total Connecticut source income that we determined on Part 1 Schedule B. We only had our one member, so that was $111,000 of Connecticut source income at the 6.99% tax rate, giving us a total liability of $7,759. We are offsetting that by payments. And let's focus on lines 5A through 5E. Here we would include on 5A any extension payments. Line 5B would be any overpayment that we elected to apply from our pass-through entity tax return to the composite liability. And we did that, and that resulted in a $4,310 refund to transfer over from our pass-through entity refund to as a payment to our composite return. 5C is where we would have any composite payments made by subsidiary PEs. So that Part 1 Schedule D that we had started off with, if we had any subsidiaries that had made composite payments, those amounts would have been reported there and then transferred over to line 5C. 5D is the pass-through entity tax credit. So this is where that PE credit would offset as a payment against our composite liability. So we're only transferring over those that are included in our composite return. So that's that one non-resident who had a pass-through entity tax credit of $6,789. So the sum of our payments is $11,099, which results in a refund of $3,340 to this pass-through entity through the composite return. So we've completed both of our forms, Form CT-PET and the composite return CT-1065, CT-1120-SI. Now let's complete the Schedule CTK1s that we're going to distribute to our non-resident member and our resident member. So just to give a brief summary of the parts that are included on the Schedule CTK1. Part 1 is Connecticut modifications. This would be completed for all non-corporate members. Part 2 is the Connecticut source income. This is completed for all non-resident and members that are pass-through entities. Remember, we didn't have to complete that for our resident member because we're not concerned about their Connecticut source income as they report their total federal AGI to Connecticut. Part 3 is the Connecticut income tax information. This is the composite payment that is made for each of these members, each of these taxable members, non-residents and pass-through entities. Part 4 is the Connecticut PE tax credit info. If applicable, this would be completed for all non-corporate members. So if, for example, the pass-through entity did not elect to file the pass-through entity tax return or have any subsidiary PE credits, this Part 4 would be blank for all of the members. And lastly, Part 5 is the income tax credit summary. This is completed for all members if it's applicable. These are the income tax credits that I talked about, the ABLE, angel investor, etc. This is what the Schedule CTK1 would look like for the non-resident individual member. As you can see, Part 1 is their portion of Connecticut modifications, which was transferred directly from the Part 5 of the composite return. So there's only one addition modification for the bonus depreciation, totaling $21,000. Part 2 is also completed for our non-resident member because they need to know what their Connecticut source income is. These items on column B are directly transferred from Part 6 of the composite return. On the second page of the CTK1, we have Part 3, which is the composite payment made. Now you may look at this and say, wait a minute, I had a liability, composite liability of $7,700 something. Why is this only $970? The reason is that a lot of the composite payment was actually paid through the pass-through entity tax credit, which you see on Part 4. So the sum of those actually equals the composite liability. And I'll show you where these items would be reported on the individual's tax return, as it kind of varies too. So please note that Part 3 would not be the total composite paid if there's a pass-through entity tax credit that would offset it. And lastly, Part 5 is the breakdown of the Connecticut income tax credit summary. If we had any, columns B and C would be completed. Next is the Schedule CTK1 for the resident individual member. We have completed Part 1, the Connecticut modifications, because they need to report these on their Schedule 1 of their CT 1040. And once again, all of that information is coming from Part 5 of the composite return. Part 2 is not complete as we do not need to determine the Connecticut source income for our resident members. Part 3 is also 0 and should always be for resident members because there should be no composite tax paid for a resident individual trust or estate. But Part 4, the PE tax credit information, was transferred directly from the Part 8 that we had completed on the composite return and allocated to the member using those numbers. And Part 5 would have some income tax credits if applicable. So we have completed in full the Form CTPET, the CT 1065, CT 1120 SI, and the Schedule CTK1 for our non-resident and resident individual. We've also received questions as to where an individual may report their Connecticut income tax amounts reported on these Schedule CTK1s, Part 3, 4, and 5. So I will go over that now. So the income tax payment that's reported on the Schedule CTK1, Part 3, like I said before, is only applicable for non-residents. A resident should not have a composite payment. This is reported on the withholding schedule of the Form CT 1040 NRPY noted below. When completing this withholding schedule, you would also check off the Schedule CTK1 box to show that that was the resource or where it came from. Where would individuals report the pass-through entity tax credit? So this is coming from Part 4 of the Schedule CTK1. These items are reported on Schedule CTPE pass-through entity tax credit. This schedule has existed before, as there was a pass-through entity tax credit prior to 2024, so this has not changed. When determining the sum of all of our pass-through entity tax credits, a resident individual would report that on Form CT 1040, line 20C. Non-residents and part-year residents would report that on the CT 1040 NRPY, line 22B. And lastly, we have Part 5 of the Schedule CTK1, Income Tax Credits. The sum of these credits is reported on Schedule CTIT, Income Tax Credit Summary. Once again, these credits did exist prior to 2024, so didn't this Schedule CTIT. Residents would report the sum of these credits on Form CT 1040, line 13, and non-residents and part-year residents would report the sum of these credits on Form CT 1040 NRPY, line 15. To summarize, as I take a sip, hold on one second. All right. The pass-through credits reported on Form CTPET are carried forward to the Form CT 1065 CT 1120 SI, meaning please do not use the PE tax credits that are reported on the PET return to complete Schedule CTK1. All of the information that you need to complete the Schedule CTK1 will be on the composite return. Overpayments from Form CTPET may be refunded directly to the taxpayer, applied to the 2024 composite return, or applied as an estimate for the 2025 CTPET. As I stated before, and I can't emphasize this enough, the Schedule CTK1 is completed using only the information from the composite return. So once again, emphasis is placed on the need to complete both if you elect the Schedule CTPET and the composite return as well. The income tax payment for non-resident and pass-through members reported on Schedule CTK1 is net of the pass-through credit for that member that's reported on Part 4 of the Schedule CTK1. And lastly, Parts 3 through 5 of the Schedule CTK1 are different payments or credits made by the pass-through entity and are reported in different areas of the Form CT 1040 and CT 1040 NRPY. And I'm going to have Kelly take over and just do a really brief showing of where our resources are, because I did mention the landing page for both the composite and pass-through entity tax return, and in addition, where the forms are located. And Kelly, before I forget, I do want to note to everybody that our MyConnect is accepting estimates and extensions, and also filing of the 2024 tax returns for pass-through entity tax and the composite return as well.
Thank you, Crystal. Take a break. Great job. Good morning, everybody. I am going to just show you quickly on our DRS homepage at portal.ct.gov/DRS how to get to some of the resources that Crystal previously mentioned. From our homepage, under Most Popular, you can select MyConnect, File, Pay, and Register Taxes Online to access our MyConnect system. By clicking on this link, I'll be able to log in or access any additional resources right from the landing page. Next, going back to our homepage, I am going to show you how to access the composite landing page in the pass-through entity. In the gray box on the left, please select For Businesses. Under Information for Businesses, number 7 is the composite income tax. If I select this link, I'll be brought to the composite income tax information page where I can read through all of the information related to the Connecticut composite tax. I can also just quickly scroll down to, for example, if I want to select how to file, I can use my table of contents here and be brought down directly to the section of how to file. From here, if I'm still interested in learning about the pass-through entity, I can go back to my home, click on For Businesses again. Under Information for Businesses, I can go down to number 19, Pass-through Entity Tax, where I'll be brought to the Pass-through Entity Tax information page. Again, this table of contents can directly link you down to your topic of interest. However, we strongly recommend that you read through the information to help you get a better understanding. Also, from this landing page or the Composite landing page, I can be brought directly to my forms and instructions by selecting Forms and Instructions in our gray box. On the Pass-Through Entity Tax Forms page, you'll be able to find your composite income tax forms along with your pass-through entity forms. You can also access other things like publications and the research library from our gray box over here as well. If you're unsure of how to navigate our website, you can head down to our Taxpayer Education Center, where we do have a video series of general DRS website navigation. And if you'd like to review this webinar and our first part 1 of this webinar on the Taxpayer Education Center, you can go to live webinar recordings and you'll find part 1. And in a week's time, you'll find this webinar as well posted under live webinar recordings. Thank you. And now I think we're going to bring Crystal back for a couple of Q&As.
Yes, thank you for that, Kelly.
All right. So question 1, Crystal. In the example you showed where a non-resident would report the income tax payments and PE credit on Form CT 1040 NRPY, would they be required to file a Connecticut return?
Oh, wonderful. So if this is the non-resident's only source of income, they are not required to file a CT 1040 NRPY. If they have other sources of income that had not been reported by a pass-through entity, or their income was less than $1,000 from a pass-through entity, they may have a requirement to file. But if in this example, this was the non-resident's only source of income, he would not have a requirement to file a Connecticut return.
Excellent. Very good. All right, number 2. What if I have an overpayment for the composite return? Can I apply it to the amount due for the PET return?
Right. So in the example, we did have an overpayment from the PET return that we applied to the composite. Unfortunately, we can't do the opposite. So if there is an overpayment at the composite return, it would be refunded directly to the taxpayer.
Thank you.
And this concludes our second webinar. I thank you all for attending, and please, you will receive a survey after this. Fill it out. We look forward to hearing your comments or questions, and make sure that we do incorporate them in the next 2 webinars. So have a great day, everybody. Thank you.